Say good morning, friends. It is MCQ number 3 in the digest of MCQs and case study released by ICI. Now let's just go through the question and the alternatives available before us. Mr. Vishal and Guha sold their residential house property in Pune for rupees 3 crores and 4 crores respectively in January 2022. The house property was purchased by them 25 months back. The indexed cost of acquisition is 1 crore and 1.75 crores respectively. Mr. Vishal purchased two residential flats, one in Delhi and one in Agra for 70 lakhs and 80 lakhs respectively in April 2022. On the same day, Mr. Guha also purchased two residential flats, one in Mumbai and the other one in Pune for 80 lakhs and 75 lakhs respectively. Both of them invested 30 lakhs in bonds of NHAI in March 2022 and 30 lakhs in bonds of RECL in April 2022. What is the income tax or income taxable under the head capital gains for assessment year 22-23 in the hands of Vishal and Guha? Alternatives are 70 lakhs and 85 lakhs, 60 lakhs and 85 lakhs, nil and 95 lakhs, and nil and 20 lakhs. See, now let us basically understand that computation of capital gain before taking up exemption is going to be very easy because the sale value is 3 crores and indexed cost of acquisition for the first gentleman being 1 crore. And the property is more than 25 months old. To regard the capital asset as long-term capital asset, it should have been crossed 24 months. So therefore, both the assessees residential properties were all coming under the ambit of long-term capital asset. Therefore, they are eligible for exemption under section 54 and 54 EC. So by taking the calculator itself, we can finish it off as far as their gross capital gain is concerned. So 3 crore and 1 crore, when you deduct, it is 2 crores. If you take up section 54, where the amount of capital gain does not exceed 2 crores, he can purchase two residential houses in India within 1 year before or 2 years after the transfer. And here you find them, or especially Mr. Vishal, whose capital gain before claiming exemption under any other section comes to 2 crores. So he is eligible for claiming section 54 from two different houses. So the sum of the investment made in the flats at Delhi and Nagar being 70 and 80, 150 lakhs. So out of 2 crores, 1.5 lakhs is going towards section 54. Then on the same date, Guha also purchased two residential flats, one in Mumbai, the other one in Pune for 80 and 75 lakhs respectively. Correct. But in the case of Guha, the gross capital gain comes to 2.25 crores. 4 minus 1.75, 2.25 crores. If you look into the capital gain when it is exceeding 2 crores, so where only one residential house in India can be claimed. So it will be quite obvious that between 80 lakhs and 75 lakhs, the one which will be beneficial to claim will be for the cost of flat purchased in Mumbai, which had costed him 80 lakhs, which is better of the two, he is expected to claim. So now you can understand that 4 crores minus 1.75, 2.25, from which we can deduct 0.8. So 1.45 is the capital gain before claiming 54 EC. Whereas in the case of Vishal, it is going to be 2 crores minus 1.5, 0.5 crores. Now let's have a look at section 1, that is section 54 EC. What they have just mentioned is that the capital gains arising should be invested in a long term within 6 months from the date of transfer. So in the given case, the sale took place in the month of January And purchase of this NHAI and RECL took place only in the month of April, within 6 months. So, as far as the timing is concerned, it is all correct. And what is the quantum? What is the maximum amount that they can claim? The maximum amount that they can claim is 50 lakhs. 50 lakhs. So, in this particular case, one has got to be very careful that 30 lakhs done by Vishal and another 30 lakhs done by Guha is what generally people will perceive, because that is the way they have just communicated so far. But we understand 30 lakhs in bonds of NHAI and 30 lakhs in RECL, 60 lakhs they have invested by both. In fact, I would just consider that this is the place where institute should have made the point clear. Both of them invested 30 lakhs in bond and 30 lakhs in bond. In another bond, RECL bond, might give the impression to the readers and the students that the first 30 lakhs done by Vishal and another 30 lakhs done by Guha, and they have not mentioned respectively. So therefore, they have missed out the term each. Each of them is what they have just not mentioned, but they have mentioned as both of them. So both of them would mean, so a person who is not that careful will take up the first 30 lakhs to Vishal, the other 30 lakhs to Guha. But if you look into the wordings properly, both of them invested 60 lakhs each. That is the conclusion that you got to make. But you have a cap to the extent of 50 lakhs. In the case of Vishal, 3 crores minus 1 crore, 2 crore, and section 54 exemption he will claim for 1.5, left with 0.5, and 60 lakhs is the investment that he had made. He has got a cap of 50 lakhs. By deducting that 50 lakhs from the remaining 0.5, you will be finding it out as nil. So we can rule out the possibility that A and B could be the appropriate choice. Now we are zeroing in between C and D. When taken up for Guha, it is 4 minus 1.75, 2.25. From that, when you deduct 0.8, it comes to 1.45. Yes, 1.45. And from there, when we deduct 50, because though investment is made for 60, but the maximum cap is there for 50. By deducting 50 lakhs from 1.45, it comes to 0.95, that is 95 lakhs. So the appropriate choice would be C. So in order to bring out a sort of an confidence that what we have just done is right, I would like to just put them in black and white. Vishal and Guha. So full value of consideration 3 crores and 4 crores. The next, indexed cost of acquisition 1 and 1.75, capital gain long term 2 and 2.25, then exemption under section 54 for two houses and only one house in this case. One house in this case. So it is 1.5 and in this case 0.80, and exemption under 54 EC. So by claiming section 54, he is not prevented from claiming it under 54 EC. 0.5 cap is 0.5. So though he had invested for 0.6. So therefore, taxable long-term capital gain would be nil, and in this case 0.95. How come? 2.25 minus 0.8 minus 0.5. So that is the way we find combination C. Combination C is the correct answer for MCQ number 3. Thank you.